Hi traders, Roberto here. Another tutorial, and today we're going to talk about a trade strategy commonly known as Turnaround Tuesday. And this is actually part of a video series that I will be sending out to our members. If you're interested in joining, just go to our website. I'll give that information at the end of this tutorial. And Turnaround Tuesday, let's get started. A very simple strategy, and it occurs approximately around 9 p.m. Eastern on Tuesday. And there are certain rules. Monday there was actually about 14 pairs that qualified. So the entry is about 9 p.m. Eastern, Asian session. Market must move a minimum of 40 to 50 pips on Monday. We target approximately the same amount of pips, which is called the projected range. Stop loss is below or above the high or the low of the day on Monday, and I always looking for correlated pairs, and I'll give you an example of that. Now, do not trade if there is a high impact news event on a Tuesday, and if the markets are flat on Monday, find another pair. Okay, let's go to the chart and I'll just show you what I mean. Tuesday, Euro Pound. The market on Monday only moved about 20 pips, so there was no trade on Tuesday. On the Euro Dollar, same thing. Monday, the market's consolidated. Tuesday, there's no movement, so you eliminate that pair immediately. You don't want to trade. So let's look at some pairs that did work out. There were approximately 14. Canadian Swiss. The projected range was about 50 pips. Market went from the swing high to the swing low. It was about 50 pips, and it managed to put 65 pips. So Monday the market sold off. You would take a trade in the opposite direction on Tuesday, and there's your trade. The stop loss is below the swing low of the day, and you're targeting the projected range, which is about 50 pips. The market put in 65. So that was one pair. Canadian yen was the other. From the swing high to the swing low, market put in about 60 pips. And then coming into Tuesday, that's about 9 p.m. Eastern. This is this area right here. The market turned around and went the opposite direction and put in 63 pips. Let's go to another pair, Pound New Zealand. Projected range was 132 pips. So from the Monday swing low to the swing high, actually I miscalculated that. It was actually a lot more, 155 pips. And from the swing high to the swing low, it's 149 pips. I don't know why I miscalculated that. Anyway, you get the idea. The market on Monday was in an uptrend. On a Tuesday, it turned around and went the other way. And we're targeting approximately the same amount of pips for Monday. So the market on Monday rallied, then you would sell on Tuesday and try to capture the same amount of pips that the market put in the previous day. Pound Aussie, projected range around 94 pips. Market shot up on Monday. Tuesday turned around and gave everything back and exceeded its projected range by 112, by about 8 pips. Pound Canadian Dollar, projected range 94 pips. Market rallied on Monday. Tuesday turned around and put in around 129 pips. USD Canadian pair, again, here's the low of the day and the high of the day on Monday. Coming into a new trading day, Asian session, 9 p.m. Eastern, you would sell. Your stop loss is above the swing high on Monday, and the market went down about 64 pips. Now this one just barely made it. Projected range is 41 pips. Remember, you need a minimum of 40 to 50 pips to take a trade. If the market consolidates only puts in 20, 30 pips on a Monday, then just find another pair. It's not even worth trading that pair. So USD yen sold off 41 pips, found support, stop losses below the swing low, and it went up 45 pips. Euro Australian dollar, again, here's a swing low of the day and here's a swing high of the day. This is Monday. So you would take a trade in the opposite direction and target the projected range. The market rallied on Monday, turned around and put in 97 pips, about 20 pips more than the projected range. Aussie yen. Now Aussie yen has been in an uptrend for quite some time, and notice that Monday it sold off, recovered on Tuesday, turnaround Tuesday. The projected range was 62 pips. It managed to put in 61 pips, and now coming into Wednesday the market's recovering and heading north again. So again, here's the swing high on Monday, the swing low of the day, and this is 9 p.m. Eastern. You would enter a trade, put your stop loss 20 pips below the low of Monday, and target the projected range, which was 62 pips. The market put in around 61 pips. Aussie dollar, and I was going to mention correlated pairs. So what I'm looking for are currencies that essentially are correlated, which are Aussie Swiss, Aussie USD, Aussie Japanese yen, or you can look at the pound crosses. For example, the pound dollar, pound USD, pound Australian dollar. So let's look at a few Australian pairs. So on Monday, market sold off, projected range was 50 pips. And on Tuesday, the market recovered and gave us around 57 pips. So Monday, market sold off, Tuesday it went up. So let's look at Australian Swiss. Same thing. Market sold off, the Aussie dollar sold off, and then on Tuesday recovered and gave back all the gains, okay, or rather it recovered all the losses from Monday. So we have three pairs: Aussie Swiss selling off on Monday, recovering on Tuesday; Aussie dollar selling off on Monday, recovering on Tuesday; and Aussie yen selling off on Monday, recovering on Tuesday. Okay, so that's what I mean about correlated pairs. Find euro crosses, Aussie crosses, pound yen, euro yen, pound USD. I'm sorry, not euro yen, but pound yen, pound USD, pound Canadian dollar. And here are a couple of more correlated pairs. New Zealand yen. Market sold off on Monday, found support, stop losses below the swing low Monday, projected range 63 pips, and the market managed to put in 52 pips, but of course if you would have stayed in that trade, it exceeded its projected range the following day. So that's New Zealand dollar. So the New Zealand dollar against the yen sold off on Monday, recovered on Tuesday. So it made up all the losses, just all the losses of Monday, it recovered on Tuesday. And here's New Zealand Swiss that mirrored New Zealand yen. Monday the market sold off, projected range was 53 pips, and it actually managed to put in more than 60 pips. So the sell-off, Monday sell-off on New Zealand dollar, and the recovery on Tuesday. The same thing on Euro New Zealand dollar, it was the opposite. So Monday the market sold off, or rather Monday the market rallied, on Tuesday it sold off. Okay. And again, let me go over pairs to stay away from. Here's Euro Pound. Monday, market's just moved about 20 pips. Does not qualify. Basically, the market's this pair is in consolidation, so there's no trade on Tuesday. Stay away from pairs like this. And also the euro dollar. Here's Monday, barely managed to put in 20 pips on Monday, so you would stay away from this pair. So just remember, at least 40 or 50 pips on a Monday to be able to take a trade the following day. Now, if you're interested in joining our mentorship program, we have, let me just go to the website. Here's the website. It's fx-northwest.com, and just click on Forex Trading, and we have several options. We have trade copy, trade signals, news events, and you'll receive on a daily basis trade signals and news event trading strategies and videos like the one that you're watching right now. And it's $79 a month. Cancel at any time. If you have any questions, just email me. This contact page, just fill out the form and send it to me. Have a good trading week, and thanks for watching this video.